Hey, what's up, you guys? Good morning. Welcome to another episode of Danny B Live. You guys, I'm so excited today to welcome my good friend, golf buddy, and wealth advisor over at Navalign, David Jacobs, to the show. In just a minute, we're going to welcome David on. But first, you guys, I just want to thank you for tuning in. If you're not yet a subscriber to the show, just want to ask you to hit that subscribe button and the bell icon so you get notified about all of our videos. We do 2 videos a week. Interview with an amazing superstar entrepreneur. Today we got David. We got great stuff coming at you in the next couple of weeks. And then usually another video all about real estate, business, and finance. My goal is to help you build a business that's predictable, profitable, and fun if you're in real estate or sales or title or lending or any other business like that. And if you're a real estate or other buyer, seller, investor, we're here for you on the channel as well. Also, if you're watching this, give us a big thumbs up so that we know you are there. All right, guys, so without any further ado, let's do this show today. I'm so excited. Let's do the intro, and then let's get David on. Here we go. All right, here we go to this way. Here we go. We got David Jacobs, a.k.a. DJ, on the show today. David, welcome to the show, man. Thanks so much for being on today.
Thanks for having me, Danny.
So you guys, I've known David for a long time. He's a wealth advisor. I actually was telling my team, I'm like, hey, can we get David on from Chartered Jacobs? And they're trying to look it up, and they're like, we can't find anything with Chartered Jacobs. So you got a new name. But same great service and business. Tell us all about it. Now our viewers want to hear how to build wealth during a pandemic. But first, we'd just love to hear a little bit about you and tell them your story.
Sure. Well, I've been in the business 25 years. We've grown. We started this firm in 2002, so 18 years ago, and we started off as Chartered Jacobs, and we've grown to 10 employees, 5 partners, and we rebranded to Navalign a year and a half ago. So upwards and onwards. We're fee-only fiduciary advisors, so we're not brokers. We don't sell anything. We do plans, and we manage people's money. And then, of course, we give them advice on all things financial, whether it's real estate, insurance, et cetera. But we don't sell any of that stuff. We rely on experts like you for that.
That's right. Don't let me in with insurance, though. You know, that's one of my thorns.
Well, you sell things. You sell real estate. Insurance people sell insurance. We don't sell anything. We just provide advice and ongoing management.
Got it. Very cool. So DJ, talk about, I know the industry a while back kind of moved to this, fee only model as opposed to like the stockbroker commission model. If you could talk a little bit about that. I know some people probably aren't really familiar with how the industry works and how you guys get paid.
Yeah, no, we get paid very simply straight by the client, and that's the only way we get paid. So we're required by law to act in their best interest. A broker, and look, half my friends are brokers, they can charge a fee, and they can also sell products. So we just simply cannot sell a product. We are a fee only. That's what that means, is we can only charge a fee to the client for the planning and management of their assets. So big difference, but it doesn't mean that the brokerage side, which is still the majority of financial advisors out there, a lot of my friends do that, and they're really good people.
Got it. So wait, so I thought the brokers were kind of phased out, but you're saying that still exists. The brokers are still around.
Oh, yeah. Well, look, the Merrill Lynch's and the UBS and Morgan Stanley's, they're still probably 80-90%. When we started our firm, again, 18 years ago, we were one of the rare fee-only fiduciaries, and a lot of folks are coming our way just because it's a more transparent model. Clients, understand that we're always putting their interests first. So it's an attractive selling point to the client, knowing that we're not, whatever we're doing is what we think is right for them.
Yeah, for sure. So basically, just bottom line, like they pay, clients pay you a fee on whatever their assets are, and then you can't actually sell them any products. You just guide them on, hey, here's what you should buy, or here's how you should invest your money.
Exactly. Yeah. Most of it starts with a financial plan and goes from there. And most of our conversations aren't about whether we're buying Apple or Google or Tesla or whatever. Most of the conversations are about, should I upgrade my house? Should I refi my mortgage? It's most of our advice comes in the form of general financial advice regarding their financial empire, whatever that might be. And then the actual fee is for the planning, the implementation on the planning, and then the ongoing advice.
Got it. But today, of course, you are going to tell us whether we should buy Apple and Google Google and Nike and Tesla and stuff like that.
I'm going to tell you everything you want to know and more.
I love it. I love it. Good stuff. So, DG, it's a really cool model. And, you guys, if you're watching the show, in the comments, there's going to be all of David Jacobs' information, all his contact info. So if you want to get in touch with him and you want to talk to him about, how that can go for you, and that is going to be one of my next questions. But before I ask that, you guys, if you're getting value here, if you're liking what you're seeing, hit that thumbs up button so that YouTube, broadcasts this all over the world. And also, I want to let you guys know that David is going to be answering questions live right now. So all you have to do is go to the chat box, not the comments, but the chat box, wherever that is on your screen, and throw a question in there, and David will answer it. So there we go. Now that we have all of that out of the way, and here we go. Riva actually says, "Hey guys," so what's up, Riva? Watching intently. I love it. Thanks for being on. Thanks for tuning in. So, all right, David, so walk me through, because you talked about, kind of how you guys get paid and what you guys do, but walk me through like a normal, client journey. I'm curious. So like, let's say, I have, I just inherited $100 million and I go, hey, DJ, what do I do with this money? How does this go?
Well, if you just, by the way, congratulations. 100 million is a nice little pile of money there. But generally speaking,
I can dream about these things.
Yeah, I mean, everyone has a plan, right? They either have a hope and cross your fingers plan, or you actually have a financial plan that sets out how you're going to invest, how you're going to spend, how you're going to save, all that kind of stuff. So that's usually the beginning. But each person's totally different. So, how we invest will depend a lot on that plan and a lot on their goals. So, defining goals, setting an actual financial plan, implementing the plan. And like I've told every client since I've done this, the first plan, for sure isn't going to be the actual plan because things change. So you have to be flexible. You have to be able to adapt. And that's really what we do is we come up with a plan, but then we figure out as things change, both in your life and the market, and a lot of other things change, tax laws change, all sorts of things change. As that changes, you have to be nimble enough to adapt. So in your $100 million case, we'd figure out, okay, what are you going to do right up front? You might maybe upgrade your house. You might maybe get a couple nicer cars. You might do some things like that. But
you know me well.
I know you pretty well. You might take a pretty nice vacation on a private jet. You never know.
That's right.
But, once you settle down from that initial rush, you're going to want to make sure you do some smart saving and smart allocating of your money. You don't want to put it all into too many things that are risky. And at the same time, you don't necessarily want to be too conservative either, because as you probably know now, is interest rates are the lowest in basically human history. And you don't, even CDs are paying nothing. So, you just want to be smart about how you allocate your money and then kind of go from there.
And that's where obviously you come in, because we would sit down and then go over that. And then, having a professional on your side like you, how often, if we were working together, how often would we be meeting and talking about this plan? And I mean, because, I know a lot of people are like watching their stocks every single day, and, that's not something I'm into. But, is that the type of thing you do, or is it more spread out?
Yeah, no, it's about, everyone's different. I mean, we've got some clients that we speak with once a year because we've worked together for 20 years and they trust us and they just want to check in and do a meeting. And then there's others we speak with monthly or more often, depending on their needs. And, someone like you, I know pretty well, you'd say, I'm going to trust you. I'm going to check out and go do what I do.
Yes.
And there's others, especially, tend to be retirees, tend to spend more time looking at things because
right.
It's just the nature I've noticed of how things work. So it just depends on each person. Busy professionals generally check in with us less because they're busy doing what they do, building their business or billing by the hour. They could be a successful attorney or whatever. Whereas people that have more time typically are the ones looking at their accounts more. But It's really flexible. We don't have a minimum number of hours, or it's people can call us whenever they need advice or whenever they want to check in, and we have routine check-in meetings throughout the year.
Oh, that's great. That's very cool. So kind of like with my with my CPA, I mean, it's very similar in terms of professional service. So that's awesome. By the way, Maxim is watching the show today, and he says hello, who you know. And so since Maxim is watching, I'm going to talk to you about the question I asked you probably about a month ago. One of the things during this pandemic, and, the kids – Maxim, by the way, is my 12-year-old, you guys. And so, kids are home. They got nothing to do other than play Xbox all day. And so I was like, listen, Maxim, and he started getting interested in the stock market. So I'm like, all right, I'm going to give you like X amount every month. Let's do something with it. And so I texted you immediately, and I'm like, what do I do? And so I'd love if you could answer that question. So someone just wants to put, a certain amount of money away every single month. They want to allocate it a little bit. Maybe they're not to the level of hiring you. What should they do with it?
Yeah, no, what I told you was there's a couple of great websites out there to help, especially people with people that are getting started, whether you're 12 or whether you're 50, but you just want to put in a little bit of money. I think I gave you Robinhood.com and Acorns, I believe. So there's a really cool new thing out there that allows you to buy fractional shares. So, a share of Amazon or a share of Google is so much people can't afford it, but now you can you can put $10 into these things, which is very, very cool. And I think that's one of the things we'll see in our business as well, is that there's no longer going to be, when I first started in the business 25 years ago, you pretty much bought 100 shares of everything, right? That's just really didn't make any sense, but people bought 100 shares. And then we started realizing, well, that doesn't make any sense because the commissions don't work the way they used to. So now you can buy 6 shares, you can buy 32 shares, whatever. Well, now you can buy 0.3 shares. You can buy a dollar amount, and it's very cool. So someone like Maxim, and it's really funny. You and a couple other buddies asked me the exact same question about they wanted a younger son or daughter. They wanted to get interested, and I said, here's the same website, and buy them some companies that they know. Yep. Buy them some Disney, some Amazon, some some banks, some things that they'll, when they're driving down the boulevard, they'll say, hey, I own some McDonald's, I own some this, and they'll follow it and get to understand. When they go on Google, they know they're a shareholder. And I think it's just really cool for them to get to understand early about the concept of investing and following the stock market. It's a really, really good idea.
Yeah, I totally agree. We've been doing a lot of that during this time when, they're not in school, just teaching them about, normal business stuff like stock market. I have Maxim selling like half the crap in my house on OfferUp, and then I give him 15%. So that's another
15%. Couldn't you give him 25?
He asked for 25. I settled on 15, and then now we've bumped it up to 20 because he wants to get the new PlayStation. So,
well, that's good to set goals. See, he's already doing some financial planning.
he totally is, man. He's already sold a bunch of stuff. He's doing really well. He's checking it all the time, which is great. By the way, watching the show is Chris Roscoe, friend of mine who I know, real estate agent. Chris says, great question, which I believe was my last one. And then also, David, Chris asked Robinhood and which other websites did you refer to? He missed that.
Acorns. Robinhood's probably the more common one these days, but truthfully, Schwab and TD Ameritrade and Fidelity, which are kind of the areas we usually work in, the discount brokers, they're on the cusp of doing this too. So there's plenty of, and those were specific if you want to buy the fractional shares. If you want to, really super cheap portfolio type of thing, those might offer it. There's also things like Betterment where you can get charged a very low fee for a very simple portfolio. It doesn't come with a lot of advice, but it's a good way to invest if you're just getting started.
Got it. And then Reva also said she's heard of Acorns. So awesome. That sounds good. So DJ, let's say someone's doing this and they've been at it for a little while and they've made a little bit of money. At what point then, going from maybe a couple hundred a month putting in, would they then contact you, have that consultation, get started working with you guys?
Yeah, that's a good question. We intentionally don't have a hard dollar minimum, but we have a hard annual fee minimum of a couple $1,000s. So generally speaking, it's when you get to a couple $100,000 or more. I mean, our accounts range from that size up to the tens of millions. So we kind of work everywhere in between. And I may not personally work with certain people that are just starting up, but that's why we have a bigger firm now so that we can connect people that are on the same trajectory. And the good news is every client here gets the same thinking, the same advice in terms of the asset management and all that. So it's one of the benefits of our growth is that we have specialists in financial planning and investment management and people that work with all size accounts. So yeah, usually, so generally speaking, it's a couple $100,000, but we also do standalone financial plans where if someone just wants a plan, doesn't want us to manage the money, we can do that. I would say about 95% of people do have us manage the money because at the end of the day, the financial plan is only good if you execute it. Sure. And a lot of people don't have the time or the wherewithal to do what we do. So most people end up hiring us to implement.
Yeah, no, like with everything, the plan's great, but you got to execute it for sure. So really good stuff here, David, that we've been talking about in the first 15 minutes. I do think everyone who watches my show is a late riser because like 9:15, all of a sudden a bunch of people jump on. So if you just jumped on, thanks for tuning in. We got actually Claire on. So Claire, thanks. She says, hey, Danny and David. A bunch of other people just joined us. If you're just joining us, I'm here live with David Jacobs from Navalign Wealth Partners. David's talking to us about building wealth during a pandemic, which we are going to get to, I promise, but we're just getting through some of our initial questions here, letting you guys know exactly what David does, how it works, and answering some other cool questions here. So if you're just getting here, give us a thumbs up. Like the video so we get shown to a bunch more people, and then more people jump on. All right, so David, before we get to how to build wealth during a pandemic, the most important question I have to ask you today is we recently went on an RV trip with my family and another family.
I saw that.
Elena hated it, but I had such a great time that when I got home, I'm like, I'm buying an RV, dude, because this is so much fun. We can go like on all these trips now that, I don't want to fly because I'm not wearing a mask and all this stuff. So RV, good investment or bad investment?
This is the perfect example of a question that clients would call and ask about all the time.
Yep.
And my advice would be take about 3 more trips with a rental before you go ahead and, those things are expensive and you have to have a place to park them. And I actually have clients that are really into it. And there's some high-end camping RV stuff, and it's great for the right person, but it's a real commitment. So and this comes up a bit, especially this last 6 months. So I would definitely say, I'm sure you had a great time. I would do it a couple more times before you drop the $100K or whatever it costs to buy a fancy camper. From experience, like a lot of things that your impulse buys, you may regret down the road. So I would just hesitate before you go ahead and do it. But and you should always listen to your wife.
David, you have not looked at RVs in a long time, man. They're like even the decent ones are like $250,000, like for a nice, diesel, like really nice one.
Yeah, no, that's not my world. I'm not. I know there's some. I'm pretty sure I have a client who has one that's about $1 million, and it looks like
nice
4 seasons on the road, But I know that's everything. There's everything from the Yugo to the Mercedes to the Aston Martin. But, so if you do take that plunge, go ahead and buy used, think a little smaller, but take my advice and do what you did this time, rent it a couple times and make sure that you're committed to it. Because, when the pandemic ends, you may feel comfortable flying again. You may look in your garage or wherever you're going to keep and say, why did we buy that last year? So just be careful with that.
So what I was thinking is actually that. I was thinking the pandemic's going to end, and all these people that bought these RVs next year are going to need to dump them because they're going to be like, what did I do? I spent, $300,000 on this, and so I'm going to be able to pick it up at a discount. But I talked about the RV, and I got a flood of comments. So Maxim says, bad idea. I guess he didn't have as good of a time as I thought he did. Clara says, haha, RV, horse, and boat are all bad investments. Agree? RV, horse, and boat.
Well, that's the joke with the boat is the best in your 2 favorite days of the day you buy it and the day you sell it. Yeah. So right. Those are all things. Well, I don't know if you can rent horses, but those are all things that you probably, unless you're all in, unless that's your thing, you really want to be careful and just probably rent when you need them.
Yep. So David, the funny part is one of my really good friends called me the other day and he's like, hey, I'm thinking about buying a boat. And I'm like, oh, dude, you totally should. Because it's great to have a friend with a boat, right?
Right. Oh, totally. Yeah. Or, go get a private plane. That sounds perfect. Right. I don't want to pay for it, but if you do,
I was like, yes.
Take me to Vegas once in a while, right?
You should definitely buy one. And Chris said, which is what you said, like a boat, after a few years, you're just paying for storage.
Yeah. And RVs, RVs and boats, the maintenance is pretty high. So
it is.
I'm very hesitant after one trip to go ahead and plunk down a couple $100,000 on it.
By the way, totally off topic, but if anyone on this watching the show is thinking of going on an RV trip, I'm going to be putting out a video. My 10-year-old daughter Lila and I got together and sat down and over a drink and a cigar, for me, not for her. We talked about like all the things that we wish we knew before the RV trip, as our first trip. So if you're watching this and you're into RV trips or you want to go, check out that video. We'll probably put it out next week. Totally off topic, but I got to do the self-promotion also, DJ.
Well, it's kind of on topic because, you took an RV trip because we're in a pandemic, right?
Exactly.
And that's part of the topic here is what's going on in the pandemic. So it's not too far off base.
That's right. Speaking of pandemic, that's a perfect segue. By the way, you guys, if you want to talk to DJ, just want to throw this out there to you guys. All of his contact information is going to be in the description below. If it's not in there already, it will be right after we finish up our interview and our chat here. And so you can reach out to David, and he'll talk to you about your financial plan and see if he can get you going in the right direction there. So DJ, let's talk about, the pandemic, since that's really our topic here. I know that the markets have been so volatile. So if you could just maybe talk to everyone about what's happened, in the last 6 to 7 months during this thing.
Sure. Yeah, this year has been nothing short of historic for so many reasons that most of you already know. But in the financial markets, right after Valentine's Day, we had the pandemic started to hit, and the market fell over 30% in 30 days. So it was the quickest and steepest bear market in history. And then the following 50 days, the market recovered 40%. So where we stand right now, most people have no idea, because most people have their head in the sand and don't want to look at their accounts and really don't follow it as closely as we do. The market's actually up for the year right now, which shocks most people. And it's not exactly what it seems, because if you look under the surface of the market, for example, like the Dow Jones Industrials, that's still down for the year. The NASDAQ, some more tech companies, is up.
I saw that yesterday.
20% for the year. The S&P 500, which is the thing we follow, which is the biggest 500 companies in the world, or in the U.S., I should say, that's slightly up for the year. But again, if you look under the hood or behind the curtain, it's really those top big tech companies that we all know, the Googles, Amazons, Microsoft, Facebook,
right,
Apple. Those 5 stocks are really leading the charge, in particular Amazon, because we're all stuck at home ordering boxes, every day. And meanwhile, the other 490 companies, for the most part, they're still recovering. And it's pretty obvious when you think about it. Travel and leisure still very depressed. Financials and energy are very depressed. Obviously, energy, we're not driving anywhere unless we're renting RVs. So really the high flying stocks that have led us in this bull market for the last 10 years have continued to soar, which is very, very unusual. It reminds me of the late 90s, when people would say, oh, all you need in your portfolio is AOL, Cisco, Intel. Nowadays, all you need is Apple, Google, Facebook, Amazon. That's been a great way to build wealth this year so far, but I would caution you if you think that'll continue. What's probably the best investment now are those dividend-paying energy financials, those types of things. The less sexy stocks, which actually usually do the best in a bear market, usually the dividend payers, people get away from the tech stocks in a bear market. This is no ordinary bear market. This is no ordinary recession. This is a very unusual historic recession where we've intentionally shut down our economy to try and protect our citizens. And I think we would argue that there was a good reason to do so. And I think
or for political reasons. Sorry, I had to throw that in there.
Yeah, look, it's gotten politicized, which is pathetic, and that's a whole other story for another show. But the real answer is, the reason the market has recovered is A, those big companies, and B, the market's looking forward. And this pandemic is in a period of time that at some point we'll be past it, whether it's in 6 months, 12 months, 24 months. No one knows, but the working assumption is that there's going to be vaccines towards the end of this year, distributed next year. We may not be back to the world where Danny feels comfortable flying in 6 or 12 months, but I would say within a few years for sure, we're going to be mostly back to normal, and the market looks forward. So right now, I would say all of our clients, save a couple who do touch, the service business or the entertainment business that has been mostly shut down, they're wealthier today than they were 6 months ago, because their accounts are up and they're spending so much less. And that's one thing that I think people don't appreciate. You hear about all this unemployment, and sadly, most of that is on the lower end of the income spectrum, the bartenders and the servers and those types of things. But most people with a decent amount of wealth are actually wealthier today than they were 6 months ago.
David, you made so many interesting points. By the way, the pandemic will be over November 4th. It's just a prediction here. Completely over. We'll have a different show about all that. But a lot of fantastic points there. The cruising industry. I'm so upset I can't go on cruises. I heard that's down a little bit.
Yeah. Well, it's come back. That was down 80-90%, and probably for good reason, because who wants to be on a tin can in the Caribbean when if somebody gets sick, you're stuck on it for 2 months, or at least 3 weeks in a room the size of of your master bathroom.
Yeah.
The cruising industry is definitely been hard hit, as the airline industry has, but it's showing signs of recovery because, again, the assumption is that people will actually start cruising at some point, whether it's in the cruises I do believe are scheduled for this year, but I feel like they're not, they're not sold out. But I think next year, so a lot of people like me personally, I had a trip set to go to Scotland actually,
Yeah.
which was a bucket list thing for me. And I postponed it from this June to next June. So I'm assuming I'm going to be going. And I think a lot of people have this pent up demand and a lot of desire to take these trips and do things that they have put on hold for this year, weddings, bar mitzvahs, and, all sorts of celebrations. And, it's really 2020 has been a hell of a year. And I think the assumption is that 2021 will be much better. And because of that, the economy, the market is assuming the economy will bounce back.
Yeah, no, for sure. I totally agree. So David, you said during, when you were talking just now that, a lot of your clients are wealthier now than they were when the pandemic started. Can you talk about some of the things you guys did as a firm to make that happen? Because the volatility, seems like it would be pretty scary for a lot of people.
Yeah, no, it is. And people are still scared. They were very, very scared a few months ago when this was all very new and we didn't want to leave our house or other than go to the supermarket. But the last few years, we had been preparing people for the reality that there was a recession on the horizon. Certainly had no idea it was going to be the coronavirus pandemic, but we were in the longest economic expansion in human history from 2009 through the beginning of 2020. That's 11 years. That's a very, very long time for our economy to expand. So we didn't know exactly when this was going to happen, and certainly didn't think this would be the cause of it. But we had ratcheted down most clients' risk. If you've got a investment in conservative and aggressive, and your aggressive does really well, just trimming that back is, selling high, so to speak, is a very prudent thing to do. So and you still might have the same amount of dollars in riskier things like stocks, but just less percentage. So we had kind of prepared people for that, and luckily we timed that pretty well. And then as the market was doing poorly, we took the opportunity to buy some things like the Amazons, which I wish I had bought years ago, obviously. And then a lot of clients, usually every bear market I've been through, which this is the third big one, the tech stocks and financial crisis, and now this, most of the time clients are calling to sell out. And I think we've trained clients well enough that we had more people adding money than trying to sell out. So those that added money in the face of this pandemic, we've really benefited. So like I said, the market's really snapped back. And I think a combination of spending less and doing some smart investment decisions, most clients are wealthier.
David, I will tell you, the spending less thing is huge. Like my wife and I just had a call with our CPA, and she's like, you guys are gonna have to pay taxes because you're not buying anything. You're not spending any money. So it's really a cool thing. Of course, that's like the worst thing she could have said to my wife, Elena, because then Elena's like, well, let's get some stuff.
Right. No, of course. Yeah. No, look, hey, but there's not much. So what things that are doing well, things like Amazon, Home Depot's doing very well, to get a little bit of real estate in this conversation. So what we're finding is people have more cash than they've ever had. The CARES Act, the government intervention, infused $2.5 trillion into our economy. Yes, a lot of that went to unemployment, other things, but a lot of people that still have their job and are still have means, they have more cash than they've ever had. So we've got over $5 trillion in cash. Interest rates are super low. What people are, and they can't spend it. What they can spend it on, they can rent an RV. What we're seeing a lot of clients do is really either remodel their home because they're spending a lot of time there. So they think, okay, I want to do that pool or the kitchen or the bathroom. So Home Depot's booming right now.
Yep.
Or they're looking at upgrading their home because they realize, okay, I'm stuck in my house. I've been meaning to do this. I didn't really, I've been busy with my life. Now this pandemic hits, and they think, well, no, if this could be something that's our new normal, I want to make sure I really like where I live. So you're seeing, a lot of clients talk about that. And I'm assuming that in your world, you're seeing that type of thing too, especially on the mid to higher end, people that want to upgrade to bigger houses or nicer neighborhoods or whatever. I mean, I personally am thinking the same thing. So I think that's, and then of course interest rates are super low, which supports higher real estate prices. So I think people are spending money not the way they would normally, just on different things, and that's supporting certain parts of the economy.
Yeah, I mean, David, you hit the nail on the head there for sure. I mean, we've been so busy over at Discover Properties the last 6 months, and the reason I think is exactly what you said. People are kind of evaluating, okay, I'm living in a condo, but, we're having another kid, we really should be in a house. Or, I have a house, it's not big enough. The yard space is something that's become huge, the entertaining space, for yourself so that you're not so confined. So yeah, I mean, it's been a really interesting ride on the real estate side for sure. By the way, I don't want to forget about our fans here. So Roberto Canas says hello to us. Roberto, thanks so much for tuning in. Really appreciate that. And then David, we have some questions for you that are lingering in the comment box here, in the chat box. By the way, if you guys are watching, 9:30 I know is when a lot of people who watch the show wake up. Maybe we should start it at 9:30. I don't know. But everyone who's just waking up and tuning in, give us a thumbs up. We got David Jacobs live here from Navalign Wealth Partners talking about building wealth during a pandemic and beyond. So lots of good questions. Let me pick a couple out of here. So David, here's one. Riva says, I've heard a lot of buzz about gold and metals. How do you feel about investing in those?
Yeah, I get a lot of questions, especially recently when you have a bear market of any kind and possible inflation. You have people talking about metals. I have a hard time recommending them only because, unlike Apple and Google and Home Depot and companies, a metal doesn't earn any interest or earn any money. It's just you're hoping that you're buying something and that someone in the future is going to pay you more for it. It's kind of like Bitcoin, the Bitcoin boom, and that's still a topic of conversation for some. So for us, it's traditionally been a nice hedge against the stock market, and we do have a small allocation to commodities in general. But in a lot of commodities like oil and gas and livestock or things like that, there's utility, meaning you can do something with it. Gold, you wear it around your neck. We used to put it in people's mouth for their teeth. There's not a real use for gold, but so I'm not a huge fan of just solely investing in gold unless it's a small percentage of your portfolio. So if you want to put in 5% or less into gold because it's a hedge and has traditionally been so, I wouldn't argue that. I would just be careful about putting too much into it.
Got it. Great question. Great answer. Speaking of which, David, you did bring up Bitcoin. That was kind of on my list to talk about. I got to tell you, I never got into that whole craze. I always just felt like, man, like it's kind of like worthless. It's no backing. There's nothing supporting it. And I don't follow it, so I have no idea what it's done. But a lot of the guys I hang out with that were into it stopped talking about it. So I assume it wasn't doing well. What's going on over there?
Yeah, it was a real sensation that you talk about at a cocktail party, and if it's kind of like tech stocks in the '90s. If you weren't part of it, then you're the loser that doesn't. You're not in on this, But you're totally right. I mean, like I said, it's like gold in the sense that it doesn't have any intrinsic value other than someone's going to pay you more for it. But at least gold is a tangible thing you can hold in your hand. Bitcoin is digital currency, and there's a lot of practical applications for it, but there's also a lot of use on black markets and so forth. So I'm definitely not a proponent of Bitcoin, only because it's a bigger fool theory. I think kind of like the internet was in the 90s, where a lot of internet companies went under. I think the blockchain technology is something that a lot of existing companies can use to better their companies, like they did with the internet. But something like Bitcoin, I just can't endorse because I really have no clue which direction it's going. And you're right. People were talking a year ago, 2 years ago, people were talking about it. Bitcoin was up 1,000%.
Right.
It's just not a thing anymore. I mean, it's certainly a thing. It's just not, most people probably lost money, which is why they don't talk about it anymore.
Yeah, that's what I figured, because like a couple of my buddies, like every time I'd see them, they're tracking their thing on the app, and then all of a sudden it just like went away, and I was like, oh, it must be like not doing well.
Yeah, and there were dozens, if not hundreds, of other coins that were created, and a lot of those disappeared. And there's some questions about whether there's possible hacking, and there's when you buy Bitcoin or these other currencies, you're not going through a TD Ameritrade, you're going through these weird websites of which some may not be trustworthy. And I just everything we do is monitored by the SEC. I can't take money out of someone's account. Like, this is the highest level of security, highest this. Some of these websites I was directed to evaluate for clients, I was like, I honestly can't endorse it for you. It's just, if you're a gambler and you want to put money in it so you can talk about it at a party, that's one thing. It really shouldn't be part of your investment plan.
Yep, makes sense. Enough about that. David, we got another question for you here from Chris. Chris says, and you talked about this earlier, so it's just a follow-up. How would we best invest into the dividend-producing stocks while still growing the portfolio?
Yeah, I mean, good question. We're always a big advocate for those that are doing it themselves to use things like index funds. So index funds are just a cheap way to be invested in the markets and diversified. So there's uh, hundreds of them, so can't tell you specific. But if you look at things, just type in the word value or dividend into a Yahoo Finance or any sort of Google search, and you'll find. So value stocks are those like the energy, like the financials that usually pay dividends. Those are underperforming the growth stocks like technology by 20, 30, 40%. So if you're looking for a buy low opportunity, but don't want to you don't want to go buy Delta Airlines because you're afraid if you pick the wrong horse there, you could lose everything.
Right.
Go ahead and put it in an index fund. And if you want to be specific, you can pick a financial index fund, you can pick an energy index fund, or what I would recommend is just putting into the S&P Value Index. Something like that is going to be more diversified than any of it. So it really just depends on how much risk you want to take. And again, it should be part of a plan. It shouldn't just be a one-off investment, because a one-off, usually it means you're going to check it in a couple of years and hopefully you did well. That's not the right way to do it. But there's no shortage of really attractive companies right now. It's just trying to pick the right ones. You really got to, which we do. We do both. We do index funds, we do individual stocks, but this is what we do every day.
Right.
So we're monitoring if something changes. We're nimble enough to get out of it.
Yeah, by the way, David, the answer to that question should have just been like, call me and we'll figure it out.
Yeah, exactly. Well, call me is the answer, but no, there's a lot of very attractive companies. You just have to be careful that there's as this government as the government support starts to wane, which we're at right now. Like I just read this morning, American Airlines is cutting off a bunch of its routes now that the government's not supporting them anymore.
Mm-hmm.
I wouldn't recommend anyone go pick one or two airlines and cross their fingers. But that's an example of a high risk, high reward. Some of
Right.
if they do make it through this without having to go bankrupt, then there could be quite a lot of money to be made.
Yeah, for sure. And by the way, Chris says thank you for that answer. So that's a good one. David, we should talk about the other thing I've seen recently, and I'm sure you've seen this too. Is there's a lot of people now that think that they're day traders, right? And they've started jumping into the market and buying individual stocks, and that's kind of now what you're hearing at cocktail parties. And I would just love, for me personally, I believe in all aspects of your life, hiring a professional, whether that's real estate or CPA or whatever, that does this every day. Let them do that so you can do what you're really good at. But I would just love to hear kind of your thoughts on those people that are like, oh, you gotta, Tesla, you gotta buy Tesla, you gotta buy Amazon, all this kind of stuff, where they're doing that versus meeting with you, having a plan. I know that's a leading question, but let's.
Yeah, no, I mean, look, I mentioned this, that it's the first time in 20 years it's starting to feel like 1999 again, where really you only need 5 stocks in your portfolio. And I think because a lot of people are either working from home or forced to stay home, you got more people that are sitting there playing the market. And I never liked the term playing, because to me it's not it's investing, it's not gambling, it's not a game. That this is money and dollars in people's lives. So yeah, I would be very cautious. It's fine to be a do-it-yourselfer, and it's fine to invest in the stocks you just mentioned. Maybe Tesla may be time to get out, but I just, it's not a diversified portfolio to have those 5 companies. Apple, Google,
Right.
Facebook, Amazon, Tesla. That's not a portfolio. That is something that when it turns and these other companies start to recover, those companies will underperform dramatically. So they're great companies. Now Tesla comes up a lot, so I'll give you my 10 seconds on that.
Yes, please.
Tesla is worth, give or take, 10 times what Ford is worth in terms of the company, and it sells 10 times less cars than Ford. So do the math. And Tesla and Elon Musk is a genius, great company, but, and that's a big but, I wouldn't be paying the price that you see for right now. If you bought it at a couple $100, what a smart thing to do is, just as it's going up and up and up, is just start, like I said before, start trimming it back. If you still believe in them, it's fine to maintain some exposure to it, but take some money off the table. To me, it just doesn't, the numbers just don't line up. Amazon, these others, they're trading at a premium, but they're great companies, and there's clear reason as to why they are as successful as they are during a pandemic. Tesla, I don't quite get, and usually when it doesn't make sense, it's going to come back and get you. So I would just watch out for Tesla. I'd be trimming that.
For sure. I'm with you on that only because I'm not a fan of the cars, but that's a different story. You know, I gotta have my combustion engine, man. I can't have a car without a combustion engine. That would mess up my brand here.
Yeah, well, the reality is every big automaker, whether it's U.S. or overseas, is coming out with electric cars, and
Yeah.
sometime in the next 30 years, most cars will be electric or other. So your combustion engine, enjoy it while it lasts.
I'm definitely enjoying it, man. My I don't think my Jeep is gonna sell out too quickly. You know, it's hard to go off-roading with an electric, but there are some electric off-roaders coming on the market in the next couple of years. So who knows?
We'll see. But the world's a changing.
The world's a changing. That's right. That's for sure. So, David, some great advice there, just in terms of those of you who are interested in messing around with some individual stocks, as well as how to diversify your portfolio a little bit. But ultimately, you guys, I will tell you, if David won't say it, get a professional in your life on that side of things to manage your wealth, because that's what David does every single day, right? And that's who you want on your side. So DJ, really, really good stuff here. And you guys, if you're just tuning in now and you're catching the tail end of the show, make sure you give us a thumbs up. If you have a question, DJ is going to answer some more of those here live on the air. So now let me ask you about a company that I actually really like. As much as I'm not a Tesla fan, Nike, that's the company that I love. Tell me your thoughts on Nike. That's the last company question I'm going to ask you.
Nike's certainly a leader in its industry, and with the debacle over at Under Armour, it's giving more opportunity for Nike. But the apparel industry is a tricky one. And in this pandemic, we've seen some that have succeeded, like Lululemon, which everyone's sitting home in yoga pants. So Lululemon apparently is booming. And then there's others, specifically most retailers like Nordstrom and the Macy's, that are just devastated. So, Nike is, I don't follow Nike as closely as I used to. We actually did hold it maybe 10, 15 years ago for a while. But just generally speaking, I would just be careful. I don't know where it's trading right now, so I couldn't really give much advice on it. But I look down like I'm wearing it. Most of my shoes are Nike. I know you're a Jordan man, so that's probably that's probably where this is coming from.
For sure. If Jordan had its own stock, I would definitely be into that. But Nike is as close as I can get, since they own a big piece of that. By the way, David, Elena says hello to you.
Hi, Elena.
So she's watching the show there. I'm sure she'll have some questions for us here. But before we get to that, so David, just a couple more questions here, and then we're going to get to our secret Danny B Live lightning round, which is a lot of fun. We're going to have a good time with that. I haven't warned you about that. You don't know what it is. I'm going to keep you in suspense. But before we do that, David, any kind of other words of wisdom or advice here for our viewers in terms of their finances, their wealth? A lot of people I know during this time have, like you said, been scared, have concerns, kind of as we come out of this, which, as you said, of course we will. Let's say pandemic is over, kind of where do we go from here in terms of wealth building, and what should people be thinking about as they watch you on the show here?
Yeah, I think the most common thing I'm seeing is people have more cash than they're used to because they're spending less, and hopefully they still have a job. What you want to do is be smart with your money. So don't leave it in a Chase checking account at 0.000%. Put it into a turbocharged money market, I'll call it. I personally recommend Marcus.com. It's Goldman Sachs online bank, which 6 months ago was paying, I think, 2.25%, and is now down to 0.8%. Right. But 0.8% is still a lot better than zero. And you can link that directly to your bank account. So the thing to be smart with cash is typically keep about 3 to 6 months living expenses. That's pretty standard in your checking/Marcus account or savings account, and then you got to do something with it. So you have to have set goals. If your goal was to remodel the kitchen or whatever it is, take a look at doing that. But sooner or later, people are going to have money. All this money on the sidelines is going to have to go into things that are going to do more than what we just discussed. So sooner or later, it's going to go into the stock market, which will boost that. Sooner or later, it's going to go into real estate, which is going to boost that. So is a very good time to be considering to upgrade your house. A good time to be thinking about putting money into the market. If you were to talk to us, I would suggest that you don't put it all into the market right away with still the unknown looming COVID-19 and the election. What we would do is dollar cost average into the market in phases, over the next year or two. And if we see another dip, then we would, invest the money then. So just be smart about it. But I would say that's the most common thing we're seeing these days is people have more cash. They're a little scared, so they're not sure what to do with it. And the banks are happy to pay them nothing to hold it. So just don't let your money work for you. Don't let it work for someone else. So that's the best advice I can give you.
Right. And if all else fails, you could buy an RV. Come on.
Well, I'm not saying that everyone's using their money wisely these days, but if RV is your thing, Danny, after one trip,
oh, dude,
I would listen to Elena on this one.
Yeah, Elena and Maxim now, apparently. I think she converted him somehow.
Yeah.
No, you know what? Actually, what's funny is like renting it is just fine when you do the math. And now they have these like peer rental sites where you can rent one from someone else. Like so your buddy with the $1 million one can rent it out to people like me, which is I think the way to go.
It's like Airbnb for RVs, huh?
Exactly. Yep. They have a bunch of those sites now. We made the mistake, and this will be on my video that'll come out next week, of renting from a company, which was definitely a mistake. We'll rent from an individual next time, which will be a lot better. Well, David, I got to tell you, man, such good stuff today, such good advice, and thanks, by the way, for that plug on the real estate side. I will tell you, the real estate market, has been extremely hot, low interest rates, all the pent up demand, people kind of, reanalyzing their priorities in their house for sure has been huge. So a lot of that stuff going on, which has been great. And in the financial markets, of course, you guys, I will tell you all day up and down, hire a professional, give DJ a call, see if there might be a fit for you guys there. His contact information will be down below, or you can find him on the golf course somewhere, which, by the way, we have not talked about. How's your golf game?
I dare to say it's been better than usual since the pandemic hit. There's really not much else to do. So we're all taking our own carts and we're playing in 3 hours or 3.5 hours and, getting out there at least once a week, which is more than usual. So except for this week because it's 108 every day. But, it's been pretty good. How's yours?
Yeah, actually same, very good because we're playing more and there's not as many distractions. So it's a lot of fun and golf game's doing well. But like you said, it's like 187 degrees here in LA. So I'm staying indoors this week.
Yeah. We're in LA. If it's too hot or too cold, we're pretty soft. And it's definitely too hot this week.
It is way too hot. All right, you guys. Well, David, this has been on the financial side and so good. Thank you for answering all these amazing questions. And before I let you go now, we have our lightning round. First, let me give you a round of applause for all your great answers. There we go. And now let's do our Danny B Live lightning round. So for you guys who've watched the show before, some of the questions I'm going to ask. I try to vary it up a little bit. But David, you do not know the questions. Tell everyone and confirm that I did not feed you these questions ahead of time.
I have no idea what you're about to say.
Nice. All right, sweet. So there are a couple rules to the lightning round. The first rule is there are no rules. But the second rule is say whatever comes to mind. You don't have to explain it, or you can. The whole goal of this is for people who are watching to get to know you a little bit better personally and understand the man behind all of the success at Navalign. So you ready to rock and roll?
Let's do it.
All right, here we go. First question of the lightning round. What is your superpower?
My superpower? Punctuality.
Oh, I like that. Actually, Elena, who's watching, would love that. She hates that I'm always late.
I respect people's time, so I'm always earlier on time.
But you do know about the 15-minute grace period.
I thought it was on the other side. Not, you mean late?
Yeah, like I have a 15-minute grace period. Whatever time something starts, I have a built-in 15-minute grace period.
Okay, well I'll keep that note. You were on time for this though, so that was good.
Well, I have people like in my ear all morning. Let's go. Let's do it. So that's a little bit different. All right, here we go. Next question. When you were a kid, what did you want to be when you grew up?
Oh, that's easy. A professional baseball player.
Oh, yeah, that's right.
I actually did play baseball in college, so I was on that ascent, although I truthfully wasn't even close to good enough. But I played with a lot of guys here in LA that did make the pros and dozens that made the minors, and that was certainly I wanted to be on the Dodgers and be Steve Garvey when I was a kid. That was my
Oh,
goal.
nice, man. What's with all the unwritten rules in baseball? I was reading like some dude hit a home run and they were already winning, so everyone was pissed at him. I'm like, well, then don't like throw him a pitch to hit a home run. What's the
Yeah,
problem?
baseball's got certain traditions that are a little stale, and a lot of players and managers now are testing those traditions. And I thought it was great. I know what you're talking about, and I don't. It was a 7-run lead, and there was the bases loaded at 3-0 count, and the guy hit a grand slam. But yeah, like don't load the bases and don't go 3-0. What do you want the guy to do?
Yep.
Let you strike him out? I mean, 7 runs isn't that big of a lead. Yeah, I think there's an old school and new school, and baseball, in my opinion, I'm a huge baseball guy, is kind of dying. So they need to spice it up a little bit. So
For
I think
sure.
I think most of the direction they're going is good.
Yeah, yeah, no, they've been having a hard time lately for sure. Although everyone should be in the Astros for sure, and I think Joe Kelly especially, man, I like that guy.
I agree.
Okay, good stuff. All right, so DJ, here we go. What profession other than your own would you like to attempt?
Other than my own, other than professional baseball player, I always wanted to be like a advertising marketing guy, like but on on Madison Avenue, kind of like whatever. What was that show called that was so popular? Anyway, I wanted to be kind of pitching things and doing commercials and things like that. And I think being a business owner, what we do here, it does give me that little outlet to spend some percentage of my time on marketing and on we don't advertise per se, but that's something I'm passionate about.
Awesome, got it. Sounds good. Okay, next question, lightning round is: what is your favorite restaurant or type of food?
Oh boy, that's a tough one. As most people will tell you, I like everything. So everything ethnic, more ethnic the better. But my absolute favorite bite in Los Angeles is probably at Pizzeria Mozza. They have this grilled bread, and they have a special type of burrata cheese, and you smear it on this bread, and it's the crispiest, most delicious bite in the city, in my opinion. So I'd have to go with that.
I've had that. It's very good. Good choice. I like it. Okay, a couple more questions here for you. These are great. I love finding out a little bit more about you and for the people to see what makes David tick here. Who's your favorite musician or type of music?
I would say you two.
I actually knew that. I think you told me that before. Oh, we're getting lots of thumbs up. So people like your Pizzeria Mozza answer.
Good.
Is that place still open right
Check
now?
it out if you haven't. It's delicious.
Is that open right now during the pandemic? You've been recently?
I have not been. I would imagine it's open for takeout. They don't have outside seating, so I imagine you can still get it to go.
All right, there we go. Okay, here we go. What natural gift would you most like to possess that you don't have?
Natural gift? Boy, that's tough. I'd like to have a nice short game in golf. That's a natural gift that I have the hands of a bricklayer when it comes to chipping around the green. So I would say I'd like to possess that.
That's a good one. That's a good one. Okay, let's see what I'm going to ask you. I have two more questions for you. First question: what is your idea of a perfect vacation?
Oh, perfect vacation is beach, sun, clear water, relax. I enjoy the sightseeing vacations, but a perfect vacation is one where you can just decompress and not, no cell phone service, Caribbean beach, perfect.
Love it. Hopefully we can do that again soon.
I know, I need it.
Yeah, definitely.
We all need it.
We were looking at trips for December, and it's like, man, like there's so many places you can't go, and so many things you can't do. So I don't know. We're trying to figure something out that'll work. But
Yeah.
okay, last question. This happens to be my favorite question of the lightning round, and here it is. What car best embodies your personality?
Oh boy. What car best embodies my personality? You gave
Yep.
some thought to this one.
And I was going to tell you earlier you can skip questions, but this one you can't skip.
God.
This is my favorite.
Yeah. God, I hate to say it, but because I'm not a Tesla guy either, but my personality, I would say it probably is a Tesla, just because I think I've evolved and grown, and in terms of how I view things, and you have to be willing to change. And Tesla is, one of the, again, I wouldn't be buying the stock at this price, but in terms of what the company represents, it's a change for the future, and everyone's trying to catch up. So I think you want to try and be ahead of everybody, and you want to lead and not catch up. So I'd have to say Tesla.
Yeah, for sure. I think that's a great answer. Well, you guys, this has just been fantastic. David, I know earlier you kind of gave everyone, some of your thoughts, but if there's any parting words of wisdom that you want to give to everyone who's checking out the show today, by the way, thank you guys all for watching the show. Lots of fantastic questions. Anything you want to leave them with as we say goodbye?
Just don't be impulsive, whether you're going to buy an RV or whether you're going to sell all your stocks when the market crashes, or whether you're going to, do any impulse. Just be very careful with how you react, because a lot of times our emotions as humans, we do the wrong thing at the wrong time. So it was actually the right thing to be buying stocks when the market fell, not selling them, which is usually the right answer, but it's very hard to do. So just be smart. As Danny says, if you don't have the wherewithal, trust a professional, and just be careful. Don't be impulsive.
And hey, you guys, on that note, check out the comments below. Give David a call. I'm always pointing the wrong way because the camera's like, give David a call over here. His info's there, and get together with him. And if investing and wealth building is something that you're very interested in, have a chat and see if there's a fit there for you guys. So, David, just want to thank you so much for being on the show today. You answered some great questions. You gave people so much value. And if you got value, make sure you hit that thumbs up button. So, David, thanks so much for being on. Let me say goodbye to everyone. You stand by for just a second. All right, you guys. Hey, I want to thank you for tuning in today. If you enjoyed this episode, please do give us a thumbs up, subscribe to the channel. It really does help in terms of all of our ratings and rankings and the YouTube algorithm and all of that good stuff. So every week, my goal is to bring you amazing value, whether you're a real estate agent or you're in any other type of business, you're an entrepreneur, or you're just thinking of buying real estate, selling real estate, building wealth, whatever that is. That's what we're here for here on the YouTube channel and also on the show Danny B Live here. Now, you guys, if you're thinking of buying or selling real estate, maybe like David said, you're thinking of upgrading your home during the pandemic right now, then what I want to do is invite you to head on over to bookacallnow.com. You could book a free virtual real estate consultation with our team of real estate experts. We'll talk to you about, where you are, where you want to go, your goals, how we can help you. If there's something we could do to help you do that, we will definitely talk about how to make that happen. There's absolutely no cost to the call. It's an awesome call to talk about your real estate and then anywhere else that we can help you. So if you have financial questions, we'll steer you over to a guy like David who can help you out there. So bookacallnow.com. Check that out. And if you're here and you're a real estate agent and you want to build your business and you want to build a business that's predictable, that's profitable, and that's fun, just go to coachdannyb.com. Oh, I don't have that as a thing down below, but go to coachdannyb.com. I help real estate agents. I coach real estate agents, lenders, title professionals, really anyone in sales on how to build a business that works for you. So you can head on over there, book a free call, and we will chat with you on that. And other than that, I want to thank you for tuning in. Subscribe to the channel, hit the bell icon, and I will see you on the next video. Thanks so much, you guys, and I'll see you later.